Welcome back to Yahoo Finance Live. It's been a very quiet deal season in terms of the activity we've seen between banks, but a little bit of a break from that theme this year in 2020 after Spanish financial group BBVA announced it's agreed to sell its U.S. business to PNC for more than $11 billion. It's a pretty big deal, especially considering the slowdown we've seen. I want to get to Yahoo Finance's Brian Cheung, who has the details on that. Brian?
Well, Zach, as you mentioned, a pretty big deal, $11.6 billion for PNC to buy the U.S. subsidiary of the Spanish financial firm BBVA. This is the biggest deal in bankland since that BB&T SunTrust merger not so long ago. This particular deal with PNC would add about $104 billion in total assets to the Pittsburgh-based bank, and that would dramatically expand PNC's reach specifically in the South and Southwest. Think of Texas, Arizona, California, areas where PNC currently doesn't have much of a presence. The bank, as I mentioned, is really focused on the East Coast and the Rust Belt as a Pittsburgh-based firm. Now, this is an all-cash deal. That's not necessarily a surprise, given how PNC didn't have the currency strength with its stock really being battered over 20% year to date. That's been the story largely for financials. But the bigger story, I think, here is the retreat of BBVA, again, that Spanish financial firm in the United States. This is a trend that we've seen with a number of other foreign banking organizations as well. When you think about the London-based HSBC backing out of a large substantial part of its U.S. operations, they pulled about a third of their branches in the U.S. earlier this year. So it will be interesting to see how PNC integrates these BBVA locations, but a pretty large deal happening in the bankland space this morning.
Yeah, and Brian, let me ask you this too, because I wonder how much, stepping back, looking at the sector as a whole, how much it signals about kind of changing, appetite for some of these deals too. Because you look back to what we saw in 2019, whether you want to look on a dollar basis or deal basis, we're down considerably. 1/5 of the overall deal size in terms of dollars since last year. So how do you, look at this deal and say maybe some things are changing now?
Yeah, well, there's no doubt that the catalyst for bank mergers has really stopped amid this pandemic. A lot of these stocks, again, getting battered. They don't have the currency to do any sort of stock transactions. But as you mentioned, 92 deal announcements in the bank space since the beginning of this year. If you compare that to the same period of time in 2019, there were 219 deals, more than double. So that's definitely been part of the catalyst here. I think the larger story is that banks are trying to chase scale out of necessity in an environment where interest rates are so low and the yield curve is so flat. The only way that you can really make sure that you can grow your top line revenue is by having a larger loan pipeline, which requires you to go out into the private market right now and buy essentially another bank, which is what's happening here with PNC and BBVA. For their part, PNC says that, yes, this is going to cost a pretty penny for them. They've paid a premium on this. It's about 134% of BBVA's tangible book value, but they also expect to incur the merger cost of just integrating these two businesses together. That's going to be almost $1 billion, $980 million. But for PNC's part, they say this is going to be better for our long-term growth. It's also going to lead to cost savings in excess of about $900 million. So when they do expect to close this deal in mid-2021, hopefully those types of savings ultimately end up happening, which would justify the pretty penny that they paid for this deal.
All right, Brian Cheung, bringing us the latest on a rarity, a big bank deal here to discuss today. Appreciate that.